2017 was a very tough year. Politically, there was a lot of turmoil, and that had a very big impact in the businesses of our customers. The SME customers, obviously, their payments got delayed substantially from government, and so they got into problems, and it made the NPLs begin to shoot. We have a very big portfolio of retail customers that were also affected because of the changes, again, in government and county governments. It meant that suddenly, although the county employees would get their salary portions, their loan installment portions were not, in some instances, they are not remitted to banks. So there were delays of 2 months, 3 months, 5 months. And knowing the stringent microfinance environment that we work in, where in 90 days you're doing 100% provisioning, so you can imagine what that did to the P&Ls of the microfinance businesses. It meant that we took a very big hit in our bottom line in terms of the provisions that we're carrying. Because for us, unlike microfinance, unlike the other commercial banks where at 90 days they take 20% provisioning, us at 90 days is 100%. So in our case, that meant suspending almost 275 million for a bank of our size. That was huge. We focused a lot of our efforts on recoveries of the written off book. So we experienced some good success there in just being able to make these recoveries. We also are not very aggressive in the growth because in a difficult market where people are not paying, you don't want to focus on growth. So we focused our efforts more on the recoveries, and I think that bore fruit. One of the things we also did, we started to focus a lot on non-interest income. Because one of the things, many microfinance entities are very strongly dependent on interest income from loans. But we've been doing, we rolled out Visa, we rolled out mobile banking, and we were very aggressive in pushing this in the market. And that, I think we were rewarded for doing that, because as our customers began to see us more and more as a bank where they could do transactions rather than an institution where they could only borrow loans, that has been a big benefit to us. Thank you. That's a good question. We have received a license. We applied for a license to do FX trading. So we will be starting with just simple basic counter transactions. One of the challenges we had in the past, our core banking system was not able to do revaluation, so we couldn't do FX. But now we have a fully fledged treasury department that we've put in place, and we are now ready to start doing FX. There are a lot of initiatives, I must say, that last year was a year of setting up. That's what I could say. We were signing up with MoneyGram, at final stages of finalizing with the Western Union. And these are all strategic partnerships that the bank needs to get into to ensure that we can offer our customers a lot of convenience. And to your point, FX is key because we have branches in key places where, like Naivasha, and that need has been there from the studies that we've done. And we are very happy that come Q2, we'll be able to roll that out. Yes. IFRS 9, of course, all banks from January were required to be on IFRS 9. And you know, IFRS 9, the model it looks at is a loss ratio of the book that you have, and the provisioning is supposed to run along the projected loss ratios. Now, we implemented it like were required. And of course, there was an impact because you must remember last year was a very difficult year. And looking at the loss ratio, of course, it was over a period of time, but last year, in a sense, also exaggerated what really it was. But we've been able to come up with a robust IFRS model that we are now running. And whatever impact, after we ran it from January, whatever impact we had, we adjusted it against the reserves of the bank. So that has happened, and we are now compliant. And it just means that we have now, as a bank, to also think a lot about focusing also more on the secured book as well. Because you see, when you look at if it's a retail book or the community book where it's group guarantees, then it also creates a challenge. So it means that the bank also, in addition to complying with the IFRS 9, there's also a need now to focus on growing the SME book that's a secured book to ensure that the bank doesn't carry much higher provisions than it needs to carry. In the strategic document of the bank, the plan is to convert Faulu to a fully fledged bank 3 years from now. And that was the right decision. In fact, if you can be honest, if you go to the market and look at the microfinance banks that converted to banks, their performance is underwater. They're struggling because they went into a space. The risk they were carrying was not correctly priced in the interest rate cap environment. So the big banks were able to weather the storm, but the small ones, they were still carrying a huge microfinance book with a very high risk. Suddenly the pricing was not in their favor, and that is partly why you're seeing very depressed performance from a lot of these institutions. So I think the first thing is to say that Faulu was strategic in deciding that let us first grow the bank to a level where we feel build the critical mass to the level that we feel is sufficient to be able to go into the big play, because in this market, if you want to make money, it's about volume, it's about huge volumes and small margins. So you can't keep increasing your margin on a smaller client base, because this customer base also has a choice. Into the partnership that you've read into, one of the key things that we look to doing in 2018, there's a model we're rolling out. It's called an IFS, an integrated financial model, and it is to be able to leverage what exactly you have described, to have what we can call almost one-stop shops, where you can walk in, get banking services, buy insurance, pick a sticker, pick your medical. I think I would say the system, we've been creating the platform. We'll be rolling out the 2 IFS first centers in Machakos and the other one in Meru. If you go to Kimathi Street, there's a small one there that runs, it's more of a customer service spot, where the customers are able to walk in and be able to get insurance products offered to them, banking products, insurance premium financing, and I believe that's what you're talking about. In a sense, we sit in one building, so Faulu is on one side because it's regulated separately by the central bank. The insurance people sit on the other side, but in the bank, we white label the products. The products are white labeled, so as customers come into the bank even today, we are selling. And in fact, talking back to the question you asked on non-interest income, one of the areas we made a lot of money last year is in an insurance product called Last Expense, and it is because of the partnership with the group, because they underwrite the risk, they underwrite that product. So it's been a very big product that has done extremely well in the market. But we take your challenge in good stride, that there's more we can do together as members of a bigger group to achieve a lot. In my view, the key growth sectors remain, of course, the SME space, because if Kenya wants to develop and move to the next level of development, we must have, the SME sector has to be vibrant. So I think banks need to play a much stronger role in that space. I believe that will be good. And the other growth areas that I think I foresee is I think we must stop this consumption business that has been very, very strong. Because if you look, if you look at the retail book generally in banks, it's gone up, but a lot of that, okay, to some extent, it has gone to finance mortgage, which has been positive, but there's also part of it that went to consumption. So you find people are in huge debts, but it's not debt, it's not productive debt, if I could talk about that. So I also think there should be more. Looking forward, I think we also need to focus a lot on educating our people. Financial education, I think, is going to be key. And but I also think we must also continue to strengthen as we think about growth, we must continue to strengthen the regulatory framework. For example, there's one of the major changes in 2018. We are looking forward to the review of the Microfinance Act. That is going to be a key driver in the microfinance space. Because I just picked one or two. I just picked the example that I gave you on the provisioning. You see, when you look at when the provisioning is extremely stringent, like it has been, it can also hamper growth. And we are very happy that the regulator is looking at that to see how can they review it, because to some extent, microfinance banks, we target the same customers. And but you find in the microfinance entities, the way it is done, it makes it kind of makes it's prohibitive to growth. So I think the other key growth area that I foresee is agriculture. Agriculture, to me, I think is Kenya is a hugely agricultural country, and one of the things that I think there's a lot that needs to be done there, because we tend to be, there's a very high reliance on just the natural conditions of rain. But yet, when you look at countries like Israel, there are many examples all over the world where if you can be able to support and do irrigation, provide input loans, I think that would significantly have a positive impact in growing this country, because the number of banked people there, unbanked, is still very huge, and I think the businesses need to penetrate these markets more. I think, let me even add, I had the privilege of attending a talk the other day at Strathmore Business School where the key speaker was Mohammed Yunus, Professor Mohammed. And one of the things he said that was to me very profound, he said, when banks went to towns, they went to the villages. When the banks went to the rich, they went to the poor. And in doing that, they are able to, today is one of the biggest banks with a very huge deposit base. So it means even as you go to the lower market, there are great opportunities. So if you ask me, for this country to change and for us to be able to have an impact that will make the person at the bottom of the pyramid to feel the impact, we must find a way of supporting people at the bottom of the pyramid. We must find a creative way of doing business with them, helping them save money, teaching them that wealth is created from savings. So to me, that is what I believe Faulu we are about. We want to make sure that we can be relevant in the areas where we are operating, and as we increase our footprint through agency banking, I believe that this bank is very, very well positioned to have an impact and to grow as it impacts people's lives positively. Faulu, first of all, in the next 5 years, we would like to, our ambition is to actually grow this balance sheet 3 times, get it to 90 billion. That is our ambition. That by the time we are converting to a bank, we are now a solid bank making decent profits. At least we'd like by that level to be at 3 billion. We feel it's achievable because it's a scale business. We now have about 500,000 customers. What we are trying to do is to ensure that we can grow that number to almost 2 million customers, offer more convenience, be close to our customers, because at the end of the day, our growth is pegged and underpinned by our customers. Become relevant to them and build analytics that help us understand and anticipate what it is that is in their minds so that we can continue to be relevant to what they're trying to do. So that is our ambition as a bank. We want to grow this bank in a phenomenal way, but grow it at the backdrop of solving customer problems so that we can be the answer to the challenges that our customers face, so that in turn we can get the reward of growth.